Bitcoin accumulation. Billionaires have been increasingly accumulating Bitcoin BTC in recent months. Following Paul Tudor Jones' lead, hedge fund manager Stanley Druckenmiller became the latest billionaire to publicly disclose his Bitcoin investment. There are four main reasons Bitcoin is becoming more compelling to high-net-worth investors. The reasons are Bitcoin's effectiveness as a portfolio diversifier, inflation hedge, gold alternative, and large risk-reward potential. Investors increasingly viewing Bitcoin as Gold 2.0. Gold is an important store of value and a safe haven asset for institutional investors. It serves as a hedge against inflation and as a hedge against potential market downside. Investors consider gold as more of a method for insurance to protect a portfolio from market corrections and macro uncertainty. As such, safe haven assets typically do not return large gains in the short to medium term. Bitcoin has the potential to achieve both, as it is evolving into a safe haven asset with massive growth potential. Gold's market capitalization is estimated to be around $9 trillion. In contrast, Bitcoin is valued at $285 billion, leaving a large gap between the two assets' valuations. In an interview with CNBC on 9th of November, Druckenmiller emphasized that the brand of Bitcoin as a store of value only improves as time passes. He said, Bitcoin could be an asset class that has a lot of attraction as a store of value to both millennials and the new West Coast money. And, as you know, they got a lot of it. It's been around for 13 years, and with each passing day, it picks up more of its stabilization as a brand. Large risk-to-reward potential. During his interview, Druckenmiller noted that he owns many more times gold than Bitcoin, but the billionaire investor emphasized that if gold rises, Bitcoin would also see massive gains and probably work better. Compared to gold, the dominant cryptocurrency is thinner and more illiquid, the investor said. Hence, there is a larger upside potential, even if Bitcoin composes of a smaller percentage of a portfolio than gold. Bitcoin also goes through a block reward halving every 4 years. Since the cryptocurrency has a fixed supply of 21 million, the rate at which BTC is mined daily reduces by 50% after each halving. If the supply of Bitcoin declines but the demand for it increases, it could cause a supply squeeze in the long term, resulting in higher prices. Inflation play. The price of Bitcoin is often inversely correlated with the US dollar index. Like gold, when the dollar drops, BTC tends to increase. Over the long term, investors, including Tudor Jones, consider Bitcoin as an ideal inflation play. Particularly after the Federal Reserve introduced the average 2% inflation target strategy, BTC has become more attractive to institutions hedging against inflation.